Hi, this is Vijay Bambani. I'm a trader with 35 years of trading experience, with 28 of which are as a founder, promoter, and CEO of an incorporated limited company that trades for a living. In my videos, I bring you the perspective from the point of view of a doer of deeds. And in this video, I want to talk about a subject that I promised in my previous video about gold. You see, when I recorded the silver video, I made you a promise that I would address your concerns about why gold prices are falling and why I'm still insisting that gold will go up. A few clarifications would be in order. Number one, for my friends who are watching this video from overseas, please reserve your comments before you note that the price that I am talking about is in Indian national rupees for every 10 grams of gold. You guys are so used to the idea of trading your gold in terms of US dollars per troy ounce. Radically different. We are talking about Indian rupees per 10 grams. That said, now other clarification. Nowhere in my videos have I said that gold is a short-term trade. Please go back to all the videos since 2019 and I have said gold is a long-term investment. Third point, I have always favored physical buying in bullion. I have never said go out and buy X, Y, Z. If some of you have forced me to name ETFs, I have given you names of ETFs which I thought were worthy, but I have even clarified that physical bullion remains the best bet. Now, let me share my thoughts as to why I said that. Why do you buy bullion in the first place? Let me ask you a question in place of the question that you have asked me. Why do you buy bullion? Now, I'm talking from a behavioral point of view. You buy bullion because you don't trust paper. And you're buying bullion in paper form. Wow! All the more power to you. Now, you're diversifying from paper assets and buying bullion in paper form. That doesn't speak very well. That doesn't sound very intelligent in the first place. Secondly, the reason why I said gold is an investment and you must take physical delivery of it is because the path to appreciation in prices in gold is never smooth. Nowhere will you see you can take a foot ruler or a scale and plot a perfect trend line which just goes up all the time. I'm going to be showing you a chart in coming up in the video after a while. So, gold's journey is never smooth. And as a statistician, and if you have basically seen my work on Equity Masters Telegram channel, which I urge you to join if you haven't already done so, it goes by the handle Equity Master Official. If you've seen some of my work on this Telegram channel, you will realize that I deploy a lot of statistics in our analysis before we basically recommend any kind of market directional views or even trades. So the longer you take a time frame, the more variable factors which you haven't thought of right now can creep into the future. This is a given. So when I say gold price projected target XYZ as on 31st December 2021, and recently in a podcast I even gave an elevated target for 31st December 2022, which is a good 21 months away. A lot of slips can come between the cup and the lips in the next 21 months. So you must understand that volatility on this journey is a given. If you're trying to trade futures, which I have never recommended in my videos, you have only yourself to blame. Now, if you scroll down my list, the playlist in which this video is, you will realize that in the middle of last year, I have recorded ample videos warning you about what can potentially go wrong in gold. We can't just discuss bullishness. We also have to see what anticipated hurdles can come in the way of a bullion buyer. And mind you, before you go further, my call on buying bullion and holding bullion still remains in place. Now, just a small recap of what I think can go wrong in bullion and is going wrong in bullion. In the earlier video, in the middle of last year, calendar year, I gave you the names of top 10 countries which are major, I would even call them swing producers of gold. The output is so high that these guys with their output can actually dictate prices of gold, just as OPEC is dictating the price of crude oil. Now, if you see, and this data is available on Google, you can just Google search the top 10 countries producing gold, top 10 countries exporting gold. The first thing that hits your eye when you see the names of these countries is, my God, these are distressed countries. Not all of them are very developed, and many of these are hit so hard by the COVID pandemic that they need huge amount of money for economic stimulus. And this is something that I had very clearly mentioned in that video. You can please feel free to go down in the playlist and look. Any video about gold, if you just go out there and see, you will get a lot of insights about what I have been thinking over the months, over the years since 2019 about gold and silver. So these countries, in order to provide economic stimulus to their population, can only sell what they have, what nature has given them. Natural resources, commodities. So Saudi Arabia can sell oil and gas. These gold exporting countries can only sell gold. Can they distress sell to repay their overseas debts, to provide stimulus, to raise cash for the government to raise working capital? Of course. Which is why I have been telling you, please go for physical holding. The reason why I love physical gold is it's bought and paid for. Once you buy it, there is no mark-to-market, margin calls, or any other botheration. It's lying there in your safe. It's all bought and paid for. It's a sunk cost. Sit quietly on it and give it time. Alright? Now, these distressed nations, and it doesn't really take too long for you to Google search that these distressed nations, their export figures will also be available to you in the public domain. Check out why and how they are exporting more. Check out what Gold Coast, Ghana is doing. Check out what the Dominican Republic is doing. Check out what Peru, check out what Mexico, check out what Russia is doing. They are all under varying degrees of economic stress. All of them. So this is expected along in the journey. And which is why you must be patient. This is an investment. I repeat, gold is an investment, not a trade, at least from the point of view of my videos. Now, it's hit a very critical level, and coming up on your screen is a chart that tells you what is happening in gold. Mind you, this is a weekly chart, so this is again not for traders. What I have done is measure the peaks and troughs and seen how much of the rally gold surrenders before the next rally starts. And this chart is spanning a minimum of half a decade. So this is not your basically curve-fitted chart, or I'm not cherry-picked the data to suit my needs. This is covering all the peaks and troughs in the last half a decade. Notice how the first rally that started in late 2016 surrendered 72%. The next one, 64%. The third one, 76%. Fourth one, 62%. Fifth one, and this was a steep rally. Remember, there was COVID. Surrendered only 38%. And the present one, we have already surrendered 62% of the rally that has started over a year ago. Now, the first thing first is, if you realize all these numbers are somewhat, I'm using the word somewhat, close to Fibonacci levels. Do you remember 61.8%, 78.6%, 38.2%? all these numbers are tallying with a Fibonacci figure. The other thing to note in this chart is how the rally has become ballistic of late. And for the first time, you saw a decline of less than 50% when gold gave up only 38% of its gains in the last correction. And in the ongoing correction, which is still continuing, although I'm seeing some resistance to further declines, it's not the hard bottom. It could go down a little from here, but it has already retraced 62%. Which is why, if you are a weekly cash alert subscriber, you would have received instructions last week about triggering a small tranche. I've divided your gold allocation into multiples of 20% of what capital you should be allocating, and a further 20% of your allocation had got triggered last week. This is the reason, my dear subscribers, as to why I told you to pick up some more gold in staggered lots. So when you split your holding into multiples of 20%, you can average down 5 times. All right. So one more lot purchased off late. This done, gold, according to me, and I don't claim to be 100% right, the time or the price can prolong. The price can decline a little more than what I think it would. The time might take a little longer, but about the rally in gold, I'm purely sure of. Recently, I did an interview on CNBC and I said gold has stood the test of time for 5,000 years. I don't see why it's going to lose its glitter so suddenly. The guys who profess to know charts as per the Dow theory say that if any asset loses 20% from its peak, has hit a bear market rally. By your logic, gold has surrendered more than 20% ample number of times in the past, and it has more than doubled in the period of the chart that I recently showed you. There goes your Dow theory. Gold is gold. It is the currency of the gods and the kings, and that is what it will remain. It is not for the faint-hearted. Don't try to make short-term trades out of long-term investments. You will come to grief. And don't pay mark-to-market and margin calls. Take pure physical delivery or stay out. On this cheerful note, I'll bid goodbye to you, not before reminding you to click like on this video if you agree with what I said. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being uploaded here. In the comment section, keep the lines of communication open. Bouquets, brickbats, love, hate, I love hearing from you. So does YouTube. It favors those videos where there are lots of comments. So keep pouring them in, negative and positive. And help me reach out fellow like-minded traders by referring my video to your family and friends. Have a very, very profitable day. Vijay Bambwani signing off for now. Thank you for watching. Take care. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.